Welcome everybody. This is the Thursday evening Viper trading webinar. If you are here to learn about trading futures markets using the Viper tools, you are absolutely in the right place. Tonight's topic is go to Midband trades every morning, and we're going to show you how to spot those ahead of time, and we're also going to sprinkle in a little bit of market correlations to help you see and take trades. So without further ado, let's go ahead and knock out the disclaimer. Stand by. I think I got this on screen too. Yeah, okay. All right, here we go. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. All right. Now, I'm going to approach this in a couple of different ways here. I'm going to approach it in sort of, how would you call it, stages or bite-sized chunks. Okay, bite-sized chunks. And what we're going to do is I'm going to start off with screen one. Let's go over there right now. Screen one. So what I like to do, and you don't have to do this, okay? You don't have to do this. This is something that we kind of happened upon about maybe 6 months or a year ago, where we discovered these market correlations. And sometimes they're very solid and powerful and can be used to give you an edge in the market on your trading. And other times they don't sync up, and that's okay, because you can still trade just looking at what you see on the chart. So what we do, to be more specific about it, is we use the direction of the NQ market. So let me back up. We got a lot of people on free trial and on a open house thing this week. So let me back up. Some of you might be looking at this for the first time and not really certain kind of what you're looking at. We trade futures markets intraday. So we normally start, Gary opens the live trading room, if you've been in there this week, at 5:55 Pacific. So I'm here in California, so that would be like over here on this chart. Right over here, okay? He opens the live room. And we don't actually show Nasdaq in the room. Nasdaq, of course, is the following instruments. I mean, the room has these instruments. It has crude oil, ES, gold futures, and YM, the mini E-mini Dow futures, okay? Our goal is to start around 6 a.m., which is when the crude oil pit opens up. And so obviously that's when Gary's looking for a lot of crude oil trades first thing in the morning. And then generally speaking, we want to be done by 8 o'clock Pacific, so about 2 hours. And truth be told, we really want to try to be done in that first half an hour to 45 minutes. And when I say done, what I mean by that is we're simply trying to achieve our profitability goal for the morning. Now, let me ask, does anybody in here have profitability goals? And if you do, what's your profit goal for the day? So let's say tomorrow morning you go in and you're going to trade a market like ES or gold or crude or some combination of instruments. You're looking to make 200, 500, 800, 1,000. What is your goal each morning when you go in to start trading futures? Trading goal for the morning. Just go ahead and type a number, and I won't tell anybody. Okay, I see 500, I see 300, I see 1,000. Now here's the thing that I want to make clear to everybody why this is important. I'm seeing some numbers. Yeah, 5 In-N-Out Burgers, Gene. I'm going to give you some little sort of tips and tricks and things that are important along the way that are going to help you in your trading. Everybody in here should have, you, meaning you, everybody in here collectively, type this in so you can understand it. I'm gonna put it this way as mildly as I can. Should actually, or must, have a trading goal for every day that you trade. Now, why do we say that? I don't want to hear all this stuff, Charles. I don't want to hear, whatever. Go. Yeah, sure. Show me some trades, man. Where's the trade setups? I don't need all this malarkey about goals. I don't need a goal. I'm here to make money. All right. Okay. Well, I get it. I've heard that before, more times than you can imagine. But why do you need a goal? Why do you need a goal? Why do we say you must have a trading goal for the day? Why is that important? Who cares? One day I'll make 200, and the other day I'll make 500, and maybe if I'm lucky I'll make 750. Ooh, oh no. Then the next day I lost 300. I started revenge trading. I got some losses early. Oh, that was ugly. Oh, next day I lost 400. I'm down on the week. Man, I better double up. Boom, 500. Oh my goodness, I'm upside down for the day. You got to have a trading goal because the goal tells you when to stop trading. Okay? That's what this is all about. You have to know. Most traders fail because they don't do this. You know that, right? A lot of traders fail because they don't do this one simple thing. You stop trading when you hit your goal. So if you said to me, hey, look, Charles, look, Mr. Man, I hear you, whatever. Look, when I think I've made enough money for the day, that's when I'm going to stop. Well, you're probably one of the traders who gets into trouble because you wind up revenge trading or you overtrade. You take twice or two, three times as many trades as you probably should take, right? You know what I'm talking about. You're not sure when to stop. You get up a few $100 and you start gambling a little bit. You got to. The key to longevity in trading in general, and I've traded everything for 25 years, stocks, trading floor, Forex, options, comes down to one word: discipline. Got to have the discipline. You got to be, let's face it, as a trader, as an independent trader, you're an entrepreneur. You are in charge of your own business. Your business is you and your trading. Look, even if you're doing it part-time, even if you're doing part-time for fun or a little extra money, it's still a business, right? You think people go out there every morning, work, and try to figure out without this? How many entrepreneurs or business owners out there don't exercise discipline? What usually happens to them? Yeah, bankrupt in a couple years, right? Well, the equivalent to that in a trading sense would be your bankruptcy would be what? To a trader. You don't necessarily go bankrupt. I mean, you can still, theoretically, you're trading discretionary money anyway. But what's the equivalent of a bankruptcy for a business owner to a trader? What is that? Some of you have been through it. I know I've been through it a lot of times. When I was younger trading, I blew up many accounts. Blowing up an account. That's the equivalent of a trader's bankruptcy. You've blown all your money out. You have no more trading capital. So, for those of you, there's a ton of people in here, and I got to tell you, I'm going to count on one hand. 1, 2, 3, 4, 5 people answered with what their goal is. So look, you don't have to type your goal in here. That's fine. All I'm telling you is that by tomorrow morning, if you're going to trade, you need to have a trading goal. Because, and I beat this horse enough, so I think you get the idea. The other thing is, I'm going to say this. This will be the last thing, and then I'm going to move on to how the trade setups are going to work. This is really important. That's why I keep saying it. You got to try your best every morning. Try your best to, and this is hard to do. I know. It took me a long time to get it down, but you can do it. Try not, oops, I'm getting this backwards. Hold on. Try not to overtrade. How many of you take more than one trade a day? Show of hands. Okay, how many of you take more than 2 trades a day? Show of hands. Me? Put your hand up. Yes, that's me. More than 1 or 2 trades a day. How many of you take more than 1 or 2 trades a day? Anybody? Come on, be honest. We're all friends here. We're all working together to make money, trading markets. Me? Yes, that's me. Well, I got news for you. You're overtrading. You're over trading. You should try to shoot for getting your goal in the morning with 1 or 2 trades tops. I can't do that. What are you talking about? You're nuts. I'm out of here. You're a clown. You don't know what you're talking about. 1 or 2 trades max. So how many of you heard 1 or 2 and done? Or 1 and done, nicely green, turn off the machine. I mean, these are all kind of quirky sayings that we've developed over the past 10 years. But you know what? They're valid. They're absolutely valid. You know what my goal is? I'll tell you what my goal is straight up. I want to come in and I want to look for that perfect ES setup. All the correlations are intact. All the markets are heading up. The equities are heading down all together. Everything's in sync. Gold's heading down in the inverse direction, or gold's heading up in the inverse direction. And I step in and I can put 4, 6, 8 contracts on ES and nail it for every possible nickel I have to get out of that trade and be done. Because here's the thing. The longer you are in the market and the more trades you take, that equates to more risk. And more risk means most traders are optimistic. I'm an optimistic person, I think. I always think about the good. I think about the profit. How much profit can I make looking at this big market move? Well, the fact of the matter is, that knife cuts both ways, right? As long as you are trading, you are exposed to risk in the market, and the risk includes both upside and downside, which means losses. So that's why we want to minimize this. You want to get to a point where you just go into, you select 1 or 2 markets that you're going to watch for the day, and that's all you're going to trade. You don't care about anything else, right? So let me ask you this question. Hypothetically, you're trading ES tomorrow morning, and you're looking at a gold chart, and maybe you have Nasdaq tucked in the quarter as a little something to watch, and you hear a crude oil trade come out called in the room. Do you care? Is that important to you? You're trading ES, you're looking at gold, and maybe you're watching YM or Nazi as a potential leader, possibly in the room, and a crude oil trade call comes out. Do you go over and pull up a crude chart and start looking for that trade setup? Is that the appropriate approach? Mark says this, I try to tune it out. Sandra says this, I don't do that anymore. I've made a lot of mistakes doing that in the past. So, in addition to discipline, you have to have focus. Focus means that you have selective hearing. If you're not trading crude oil, do you care about any trade calls on crude oil for that morning? Do you care? No, you don't. And should you go pull out, all of a sudden you watching this and watching that and trying to decide where to get in on everything in the chart, you watch it for half an hour and you're getting ready to take a trade, you just scrap all that and pull up a crude trade and start chasing crude around? No. If you're doing that, please, I highly urge you to stop doing that. Because there's a double whammy effect that happens to you from doing that. And you know what it is? Here's the double whammy. Let's suppose that you're watching that ES chart over there and you're watching this Nasdaq and you're watching gold. And all of a sudden right here on the equities, the leader of the pack on the equities is normally Nasdaq, NQ, and Nasdaq futures, right? This is the tech company's futures, right? And right in here, you've been patiently waiting for all morning, right around before, 6:49, 6:50, just before 7 a.m., Nasdaq peaks, flips, and breaks down like a big dog and drops 120 tick, taking all the equities with it. Well, at that same time, over here, maybe a couple minutes earlier, you heard a crude call that you think is going to make you a ton of money. You lose focus on this, right? And you're scrambling around on your control. Where's that instrument list? Oh, geez, I gotta add crude. I thought I had a crude. And then you look at the chart and you get the thing. So the double whammy is this. Not only did you miss the critical trade you've been waiting for patiently for a half an hour, you miss it. And by the time you pull up the crude chart, guess what? Guess what? What happened to that crude trade that was called 5 minutes ago, 10 minutes ago, and you finally get the chart up? What happened with that? Is that still available to you think? Or is that done? Is Gary and some all the traders taking profits? Are they taking scalp trades and got runners in place and you're just seeing it for the first time? You missed both. Right. That's the double whammy. You missed the trade you were looking for all morning, whatever, the short. You go over, you chase whatever, the chart you didn't have up, or maybe you had crew, but it's on another screen, you weren't paying attention to it. And by the time you get in, the call's already come and gone. So that's what I mean by focus. Okay? What I mean by focus is, and this is really, really important. Once you've made a decision in the morning to trade a particular instrument, and you're tracking it like a sniper in the woods, okay? You can't lose focus. You can't go chasing things around, pulling up charts at the last minute. That's a recipe for not making money on the trades you want to take and potentially getting whammied or chasing trades that you shouldn't have been looking at in the first place. So if you're guilty of that, don't, please, that's a habit you need to try to break. Well, David H., I would, David says a lot of days ES does nothing. Well, I mean, let's get on with it. Let's talk about that. Now, when I look at Nasdaq, I want to tell you how, and you hear me discuss it in the room with my observations. I am not trading it. Very rarely will I ever take a Nasdaq trade, or if I do, what I will do is I will put on a sim trade. I'll put a sim trade here. Now, why would you put a sim trade on Nasdaq? Let's suppose that down here at the open, you bought Nasdaq somewhere down on here at this bounce, and you put a long sim trade on down here, and it went up, and you're tracking it. Why is that important? Why would we do that? What value does that contribute to your decision making on other instruments? To know that from 6:30 till approximately 6:57, that the direction of Nasdaq was what? I'm not talking about trades. Notice what I'm asking you. I'm not asking you where would you get in and get long. That's not the question. The question is not where are you trading this. That's not the question. What is this direction? What is the direction that this is telling you to go? Up or down? Okay, I'm going to put a text box here. Text box, and I'll put it right next to this arrow, and I need to type something in here. Am I going to type up or down for the Nasdaq direction in the first 27 minutes of trading this morning? By the way, it might sound to some of you like I'm upset or angry. I'm just so excited about trading. I'm excited about the correlations. I'm excited about making money. I'm excited about all of you making money too. And so sometimes I come off as sort of, I'm not rambunctious. I'm not all jacked up or anything. I'm just very excited about this. So I'm not angry either, by the way. I know some people think, oh, he sounds really angry. I'm not, trust me. Yeah, it's up. The direction on Nasdaq is up. So before we even look at taking an ES trade or a YM trade, knowing that this is the case on Nasdaq, what kind of trades are we looking for on ES and YM? Just knowing this is all you know. Okay, I'm going to put a text box up here, and we're going to try to predict what direction. Okay, I'm going to put this in here. So I'm just clear. People have been confused about this, so I'm trying my best to try to clear this up. Using NQ as a directional guide. Directional guide, right? Here, and let's just do it this way. And just so we all get on the same page here. And in this case, what we're looking at here, the subject at hand, it is up. What type directional trade are we looking for on, I'm doing this in two ways. I'm going to put ES and YM. What should I type in this blank? Long or short? And for gold. I'm going to put a blank in here, and I need to fill these blanks in. So let's do it. Let's call this number 1. So that would be your first answer, is that longs or shorts, L or S, for the equities. And gold, L or S, number 2. Using Nasdaq as a directional guide for the first 27 minutes of trading after the open this morning, and we know that it's up, we all agreed. If we're going to trade the other 2 equities, ES and YM, what am I putting in here, long or short? And we know gold is in an inverse relationship with the equities, and therefore, if the correlations are intact, gold should be long or short in this thing here. 1 long, 2 short. Good. All you got that. Let's see, I got a question from David L. I'm going to show you that, David. I'm going to drill down really, really good on that. He's saying I have trouble sometimes seeing where to get in these trades. So the first thing you want to do before you consider taking a trade on any instrument is you got to know what direction it's going, right? And we have the benefit, and this is not hindsight. If you recall, when you were in the live room, I said right at 6:30, Nasdaq is breaking up precipitously, and we're looking for a long on a pullback on ES, and that is in the pre-market. Market hadn't even opened yet, and we're looking for a breakdown short on gold. Now, was there any of you in the room and heard that? Gary and I both said that. Anybody remember that? I said we're looking for a pullback to get long on ES, and we showed support areas. I'm going to show you in a chart in 1 minute, okay? And we're looking to short a break of gold. Now, a lot of you are saying, yes, I was in the room. I remember hearing that. Good. Now, knowing this over here, was this helping me to help decide what to do? Yes. This is the guidepost. This is the GPS in your car telling you what direction to go. All right, good. So the answer over here was up is long on the equities, and the inverse relationship, of course, with gold is down. So that would imply, if the correlations are intact, that in fact gold would be going down, should be, and that you're in fact looking now for short trades. Good. All you got that. Perfect. So it's good news to see and hear that our correlation discussions have been sinking in, and you're starting to understand how these all work. Now, if you don't have enough screen space to put Nasdaq, or you can't find, on your second or third or fourth screen, tuck it somewhere, just keep an eye on it. I will help you, and as much as I can observe and tell you what's going on with NASI, I'll call out levels and I'll tell you what's going on with it. So I'll help you with that. Well, Sandra, that'll happen. Okay, so here's the thing. Let me. Is there any question on this? Now we're going to go right into the trades. I want to just sort of prep everybody. So normally the way you're looking at this is that we're looking for an uptrend, and ideally the background would be nice solid green, right? And all the bars would be blue, and the mid-band all stair-stepping up real pretty and everything, and then we get up to the top and it reverses, and then red, and down you go and everything. But this is like a striped shirt. I understand. You might find that a little bit confusing. I understand. The thing we're trying to impress upon you is we're not trading this instrument. That's all you got to remember. It's simply a directional guide, only because it's a leader. When it starts to move, everything else follows. It's like having a little crystal ball, and your ball, right before you're ready to, a minute or two before it pops up, out of your little 8-ball crystal ball thing, it pops up and says, get ready to short. Right? Minute or two before you take the trade. Get ready to get long. Get ready to get long. It's coming. That's all we use this chart for. I don't see any other questions. Let's move on. Okay, I'm going to tuck that Nasdaq aside. I think everybody understands what we use it for. And let's get up ES and gold. Stand by. Okay, I'm going to put gold on the left. I have some notes on that. I'm actually going to take those off of there. Stand by. Hold on. Let me clean up the charts. There's some residual comments on here that I have to remove. to make it more, you know, explainable. Okay, let me get the Nasdaq chart, or the sorry, the ES. Where's that puppy? Oh, here it is. Okay, good. All right, here we go. I'm going to kind of show. I was going to do a recreation of real time and kind of show the charts, the bars as they unfolded, but I still sense that there's a little bit of confusion about how all this works. And so I'm not going to do that. What I'm going to do is I'm going to show the static chart and then explain what the setups are. So you, because I'm getting a sense that some of you are really just struggling to just see the trade, to just see it. And so what I'm going to do is I'm going to take some considerable amount of time here to go into a lot of detail on how to take and trade the setups. Okay? Here we go. Let's do this together. You ready? Okay, here we go. I'm not a Nasdaq hater. I love Nasdaq. I'll tell you what, I wasn't too enamored with Nasdaq when we traded it in the room and it beat everybody up. And then we sort of took a step back and we started to, you know, I took my big 4 screens here and I started really, you know, stepping back a little bit and trying to watch in sync with what's going on. And it became clear to me many, many months ago, these correlations where gold can be selling off and the equities are going up when everything's intact. And more importantly, that one of them will be a leader and will break before the others do. And when the others do, they will follow. And so that's the whole idea, is you want to take reliable, high probability trades. You get in and out of the market like a sniper. You make your money, you lock it down, and you go into sim and practice, or go get breakfast or coffee or whatever you're going to do for the day. I actually like Nasdaq. In fact, I think that since we've discovered that Nasdaq's the leader and put that into our trading repertoire, we're probably doing better than we ever have. So it's actually a very good thing. Now, what I want to show here is this. Okay, this is gold on the left, and this is ES on the right. Okay, so gold is $10 per tick of movement. ES is $12.50. So it's $50 per point, $12.50 per tick. Now, what I'm going to say to you is this. You don't have to trade both of these instruments just because you're looking at them. Okay? What did we say about Nasdaq? Let's bring our friend little Mr. Spazzy Wazzy down here again. Did we say we were trading this instrument? Going back to what we talked about in terms of leadership, did we say we were trading this? No. Right, we're not. Okay? Now, as you look at the gold and ES charts, do you have to trade both of these charts? Do you have to put a trade on here and put a trade on here at the same time? Do you have to do that? What do you think? No. No. Wouldn't you agree that if Nasdaq is heading in a certain direction, being the directional leader, yes, that if gold corroborated that direction, up or down, that would only serve to enhance you loading up with a high degree of confidence on an ES trade, being the follower. So what I'm saying is, what am I trying to say? What I'm saying is that, in fact, you have 2 correlations you're looking for. In fact, you can be looking for all 3. You can look in the room and see it right on the screen. And you have it. What I do is, most of you know, I have 4 big screens. I have an exclusive trading computer, hardwired right into the fast modem. When I go in the live room, I'm using a big old laptop here. Okay, so it's not that when I'm in the room, I'm not connected to my trading. That's separate, right? So let's talk about what's going on here. In the pre-market session here, what was the prevailing direction on ES? To the right of here, was it up or down? U for up, D for down. From this point, about 2:30 in the European trading session, AM Pacific, was the direction up or down? U for up, D for down. 5 seconds. What say you, team? So I'm trying to answer your question, Sandra. Her point. Let me explain what she was saying. She was saying, let me get her question back up here. Sandra was saying this, everybody, and it's a good point. But I think you're asking it in a way that is. Here, let me see what it says. The problem was when gold was moving up earlier, I couldn't react fast enough to get in it. Well, I'm trying to answer your question, and maybe I didn't do it directly, but let me be clear about it. You can clearly see, and I'll address it when I get to it. No, I know you're not complaining. What I'm trying to say is that gold can also be a confirming directional indicator for you, in addition to Nasdaq. So we look to Nasdaq, we look to YM, and we look to gold if we're going to trade ES for the correlations to be intact. So yeah, gold can plow straight up as it did right here and then go take its high out. But that doesn't mean you have to jump on it and trade it, right? Now, the correct answer here was up. Nasdaq has a series of higher, ES has a, so you got the European trading session. Early in the European trading session, the trend was down. So I'm here in California. So midnight today was the 13th, midnight right there. This is when the European session kicks off. It's the end of the Asian session. And we can see there's been a lot of concern in the markets about the coronavirus, affecting growth around the world, China and all what have you. And so that negativity has led to market sell-offs. Now, if you're a student in the market, you've been watching these markets for the past several months, actually since last fall, that if you go and pull a daily chart up on any equity, and you'll see the trend's been up. So how is it that you get these massive sell-offs due to virus concerns, and then the market winds up going up? What's going on? Anybody? Any speculation as to why markets sell off and then they run them right back up? Why are they doing that? Every morning they do that. Why do they do that? Why are these trading bots doing this every morning? They run it down, run it down, run it down, run it down. They find a support area. This is, by the way, this overnight, this white dash line was the low of the day. It was being broken all the way down until 2 o'clock to get a better price. Well, the way it looked at by market participants in the financial community is those are buying opportunities. So you buy the dips. When you're in an uptrend, when the market's trending up like the equities are now, you buy the dips. So for instance, when I woke up and looked on Bloomberg and I saw that the Dow futures were down 148, the first thing that goes through your head is, going to be a down day. No, market trend is up. They're going to wind up buying the dips. So then let's track. Okay, so what I'm trying to explain to you is how I get from overnight to how I look at the open. Okay, so let's go forward from here. Here we can see that ES gets a V-shaped bottom, takes out the midband and the swings, and pushes up to this swing right here at 59.25. Now, what can you make note of happening between this side of this line and this side of this line? What's different from here to here? Let me advance the chart a little bit more. Okay, what's different from here? What changed from here to here? What's different? Did the background color change green? You don't see red bars and stair stepping down with a red background anymore, do you? You see green background with blue bars and yellow bars and starting to stair step up, right? See it? So that's how you know that's a telltale sign of an uptrend, right? Green background, solid being a green background. The only thing that needs to happen now, conversely of what the downward sell-off is, where the midband and all the bands around it are stair-stepping down like such, we need the midband and all the bands to do what over here? Right, start stepping up. Well, let's go see what happens. There you go, right? See it? So you were right. Everybody who said that the trend on the right-hand side of that line in the pre-market for here is up, you were correct. The trend is up, right? So we have a couple things intact. We know that right at the open and going into the open that Nasdaq blasted up. We see in the pre-market session that ES, the trend after about 2:30 in the morning Pacific time, that the trend was up. So already before we get to the open of this market, we know that we are looking for what kind of trades? Long or short? Well, based on Nasdaq and the current direction that you see here, you're taking longs. Trend's up. Now, when we look for trades, do we look for trades that are pushing up like this or pulling back? So for some of you that are new, you might not know this, but so is our trade on what's called in the directional discussion is this is called the thrust. The trend is up, so that's the thrust direction, and the retracement is this one right here. This is called a retracement or a pullback into support. So are you getting long here? Let's call this position A, or are you getting long in position B? A or B? Where do you pull the trigger to get long? In this chart right here. If you're following along with me here, this would be A. You're buying up here because it's heading up and it's a good spot to get in, right? Get in right here, right? Or B, right here. B, that's correct. You always, 90+% of the time, enter a trade on what's called a retracement or a pullback into support on the long trade and a kiss and roll from resistance on a short trade. Now, for those of you that are brand new, the definition of a mid-band trade is as follows. You have the band above the thick line in the middle called the midband, and you have the band below the thick line in the middle called the midband, or bars that are sitting directly on the midband itself are by definition a midband trade. So let me ask you this. 3 seconds on the clock, because most of you know this, so if you know it, you'll know it in 3 seconds. Is this area right over here, is this a midband trade, yes or no? Right over here. Is that a midband trade? 3 seconds. Just a Y, boop, N. Yes or no? 2 seconds. 1 second. Yes or no? Simple question, a Y or an N. Time's up. Yes. We just showed you. We just showed you like 2 seconds ago, literally 2 seconds ago, that if the bars are in this band or this band or on the line itself, this is a definition of a midband trade, whether you're long or short. They all are right here. Are these bars in and on the midband or below the midband in this band right here? Of course. It doesn't matter what the color of the midband is. So, let me just clear that up. And I'm not disparaging the color of the midband, okay? But truth be told, in all the years we've been trading, I don't really look at that at all. I don't look at it at all. It has no relevance at all to my decision on where to get in on trade. None. The color of the midband does not. I can say this, though, in all fairness to the midband. Let's not pick on the midband. Let's be friends with the midband because it's your friend, okay? It can be a good confirmation when you're in a solid move like this down move right here, where you can see very clearly that the midband was a solid red as the market tanked. So, in an uptrend when it turns blue, over here when the market starts breaking up, it has some relevance to it. But it's not, I don't use it to make trade decisions. I don't use it to make trade decisions, right? Well, truth be told, you didn't have to take this trade right here. That's fine. But by the time you broke up and pulled back here at B, is this a midband trade? Yes or no? By the definition. 3 seconds. Just a Y or an N. Boop. 2 seconds. Is B a midband trade? Yes or no? Right here, these bars. 1 second. Just type in a Y or an N. This is what you got to do. This is called muscle memory for your trading brain. Your mind has to be able to very quickly discern what it's looking at and make a trade decision. Because I think you would all agree, and I'm not going to say most, but I'll say some of you have this issue where you hesitate, right? You're not sure. You don't want to pull the trigger. You're scared of losing money. Every time you get in, you get stopped out. It's the same thing playing in your head all over again every time you take a trade. You got to stop that tape playing in your head. You got to get confidence in yourself. The only way to do that is to learn these trades like the back of your hand right here. And that's all you got to do, back and forth, just like that. Oh, it was a mid-band trade. I see it right there. Look at that. Box it in. Market order, limit order. However, by hook or by crook, you're long off that B. See it? Just toggle back and forth. That's all you got to do. Do that 15 exercise 15 minutes a day on long and shorts, and I'll tell you, within less than a week, you'll be seeing those like the back of your hand. And these is what make you money. Now, the thing that gets challenging, let me forward it over to right ahead of the market open. And I'll explain something that can be a little bit frustrating, but I'll show you how to deal with it. So now let's fast forward to 5:55, 6 o'clock, 6:15. We're literally 15 minutes away from the market open. And even though we looked at Bloomberg and the Dow futures are down 148, I think I had it written down. Let me see here. And the S&P futures are down 14 handles. We're thinking down day. And sure enough, you look at the market, and here it's run all the way back up to here. And it's pushing the highs of these swings. Isn't that frustrating? I mean, come on. Sure it is. And you're like, oh, man, what am I going to do? It looks like the direction's down. It's running all the way back up. It's at the high of the swing. Here's another thrust. I can't get in a thrust. I know, I saw this trade. I missed it. I wasn't awake at 4 o'clock in the morning, whatever. What am I going to do? What are you going to do? No, seriously, that's a question. What are you going to do? Tomorrow morning you wake up and it looks just like this. All over again. What are you going to do? Anybody? No, that's not a rhetorical question. I'll give you 10 seconds to type in your thoughts on what you're going to do tomorrow morning when you're faced with the same thing. And it doesn't matter what instrument it is. I'm showing you ES, but this could just as well be crude, right? It could be a currency future in the European session. It could be gold tomorrow morning. When a market looks like this and you're at the peak of a thrust and you're getting ready to 6:30 is coming over here for the 9:30 Eastern, open the market's just coming right around the corner here. What do you do? There's only one thing you do. So if you're going to learn one thing out of everything that we talked about here, you don't remember anything. Tomorrow morning, this is the one thing you should remember. What do you do? 4 seconds left. Two seconds. Tomorrow morning. Some of you might know and not know, and that's okay. Look, if you're learning and this is all brand new to you, it's perfectly okay. Don't worry about it. Everybody has to take time to learn. It's no big deal. But the thing is, you've got to commit to yourself to learn it and then act upon it and take it. That's how you make money trading futures, right? Time's up. You wait patiently for a pullback. Look, I know that's the hardest thing in the world to do. I've been trading over 20 years. It's still hard. I get frustrated. I'm not a robot. I'm a person. I get up, I see this stuff, I look at the charts, I'm like, here we go. Here we go. But then I collect myself together. Use a little tape and some glue. Put some paper clips on it. Try to figure out, okay, what am I going to do? Now, if you're looking at this chart and you're trying to decide what you're going to do to get in a long trade, where might you get in the long trade? Here's the numbers over here. Okay, here's 54. Would you get in at 54? Down here, 51. Let me put it a different way. If and when the market was to retrace, where might it go to give you an opportunity to get long? Come way down here, you want a deep retracement down to 49, 53, 5 seconds on the clock. Where are you getting in? By the way, as you're pondering the answer to that question, I want to explain something, especially if you're visiting. The reason we take so much time to teach this in detail the way we do, and if you noticed how methodically I started with building on the Nasdaq chart and then coming over to talk about gold, talking about what the direction of the market's going to be, right? These are all foundational building blocks for you to learn, because what you want to do is to be empowered to see the trades for yourself on the screen. I've said this 100 times. We want everybody to be able to see these trades ahead of time for yourself. And that when you're in that live room and somebody says, I want to get in long here, that it confirms what you have already seen for yourself. That's why we spend so much time teaching this. We want you to be empowered and have the strength to see it for yourself. And the room is just there to help you. Good. Now, I see a lot of things coming in here. I see a lot of numbers from the team clustered around this area right in here. Right? I see numbers like 59.50. I see 60. I see 60.50. I've seen a couple 61s from everybody. And so what I'm hearing from you and seeing from you is that if ES was to pull back around the open and find support in and around the mid band, we would look to initiate a long trade, right? Okay. All right. So let's advance the chart. Now you tell the team, everybody here has a vote. When you think it is the time to get long by signifying and typing in the letter L. I'm going to go bar by bar. Okay. Here we go. In fact, I'm going to just blow it way up. Just take the gold off the table. Just for now. Just not, don't worry about this. Let's just talk about the ES entry. Okay? Here we go. All right, there's 614. Here we go. All right. So you're pre-market, here again. We're up at a swing. We've already bounced. We see if there was 2 trades here, we missed them. We know we can't get in here. And we got our sights on right here. Okay, I'm preface it. I'm getting this all teed up real good for you. Our eyes are right here. We're looking for this, like laser focused. I'm going to advance bar by bar, and you signify your long entry by typing in the letter L. Here we go. Yeah, those bars are big enough. Okay, here we go. All right, 615, 620, 621. 629, 630, 630. A couple of bars forming right as the market opens. That's not unusual on ES. A couple of 3-4 bars right at 630. Still 630. Going to be 631 in a minute here. Okay, still 630. It should tick over to 631 in a minute. Okay, you're looking to get long. Right? Looking to get long. Let me really blow it up super big. Okay, typing in the letter L. When you think the long trade is set up and ready to take, type in the letter L. Okay, still 630 or 631. Should come up any second. Typing in L. When you're in the sweet spot of taking the long trade that we had anticipated from all the way over here and all the prep we did. Okay, there's 630. Come on, 631. There's 631 right there. 631. Okay. 631. 632. All right. Did everybody see it? You want me to do it again? Okay, I'm going to do it again. Here, let's do it together. Now I'm going to, in this round, I'm going to help you. As I recall, one other thing that could have helped you, and I, this is my recollection of it, how it went down, is that the two other things that would have helped you see it. The reason I asked if you could see it yourself was because I was testing whether you would be able to clearly try to figure out where a support level would be near the midband, and ahead of time, proactively on your own, say to yourself, if it got down around 60, 60, 50 and bounced, I would look to get long there. And a lot of you did, and that was perfect. That was right on the money. That's exactly the sweet spot you're looking for. And you could put this line on your chart. Gary had a line right here at 60. He had a line right there. As the market was up here at 615, 620, and I came in the live room, I said, if ES pulls back anywhere around 60 and bounces, I'm going to buy that and get long. Remember that? I said it. And sure enough, the son of a gun came right to it. Right to it. I mean, I got to tell you something. The trade setup does not get any better than that. I mean, it is right there. I mean, if there's any trade in the world that you could have jumped on and made just beautiful money right out of the gate with no heat at all, and it came right to your entry spot on the button. You get in on the bounce, Sandra. You get in on the bounce. Right. So, in the case of using the object trader tool, you would engulf these bars on the midband like such. So that's a good question. Let me answer that, because there's been some speculation and questioning around this area. You don't, and just to be clear, you don't blindly put, we don't recommend that you blindly put a limit buy order at 60. Why don't we do that? Well, Charles, you said 60. Why don't you just put a buy order there? It comes down, you get filled. Why don't you just do that? Well, hold on. As it comes down here and flirts with this area, is it possible it could go deeper? Or even break down and go the other way? Yeah, it could blow through it, Louis. That's right. So part of the reason we engulfed this box right here, or you could right click. Let me make sure I'm in sim. Hold on. Sim. Yeah, stand by. Hold on. I don't want to get filled on I don't want to get filled out after hours on a trade and then forget it's there and get hammered. Let me make sure I'm in sim before I show this. Okay. So I know some of you are saying, well, Charlie, it's too fast. I can't draw a box. I don't have time. Whatever. It's okay. How long does it take you to do this? Right click. Oops. Hold on. Jiminy Christmas. Right click. Buy limit order. Right here. How long did that take? Like 2 nanoseconds? So the reason we do this is because whether you use a box or a limit order or a market order here, however you get in, is that you want to see the momentum return to the upside like such. It has to come, so there's really kind of two parts of what's going on here, right? It has to come to the area that we anticipated to find support around the midband. And we know it can go deeper or more shallow. That's the secret sauce. Okay? When you buy a Big Mac, the people that say 5 billion Big Macs is because of the secret sauce. That's the secret sauce of trading, is that you don't always know how deep or how shallow the trade is going to go. But when it's sitting in the sweet spot of your entry point, as it was right here, now, and it pauses, all you are looking for is a resumption of a move in the up direction. And that's why you wait for it to bounce and don't blindly put a limit order right here. Now, what happens is you get a close on this bar right here. This would have probably filled you would have been filled 61.25. In fact, I think that was my fill on, as I recall, on ES long. So you're filled. You're long. See it? Now, if you're going to get a scalp trade off and you're looking for a move, where should it go? Where should it go? You're long. You're filled right here. You're long. 61.25. Here you got 2 on. You got two contracts long ES from 61.25. Where are you looking for it to go? Look at the chart. If you have 2 on, where might you peel one? How far up? Where? Anybody? What are you doing? You're in the trade. You waited all morning. You waited, patiently all, or at least a half an hour. You analyzed your charts. Anybody? How are you going to manage the trade once you get in it? By the way, just to help you out with that, by 6:32, where was Nasdaq? While you're pondering your answer to that question, by 6:32, where was Nasdaq at 6:32? Let's take a look. At 6:32, Nasdaq was already up here. Nasdaq had gone from 48 to 76. What is that? 28 times 4. This is almost 100 ticks in a minute. 100 almost. This is like 80, 89, 90 ticks. 90 ticks up in like a minute and a half. So that's why I say this is not tradable. Can you as a human compete with the computer doing this? No, you can't. But it doesn't matter. It doesn't matter. What matters is the fact that it has run 100 ticks in 2 minutes. So where is this going to go? Well, I'll help you out. We're looking for at least, when you take a long off the midband, you want to at least get back to line 6 and break it. Normally, this is about 8 to 10 ticks, and we say something like you want to get your scalp off there. That's usually about 8 ticks away, and it is, like 9 ticks away. You could have had your target right here at 64. That would have been exactly 10 ticks. Okay? Yeah, right here. There's your scalp. Now, if it breaks that, we generally want to see the market come back to where? Well, where the next swing high was, right? We talk about that all the time. Here's the swing high, right at 66.50. We were calling this. We were tracking this, right? So here we go. Boom. You got your scalp. You're coming right for. You take this out, 66.50. Now you engage the trail on your runner. You're down to 1, right? You can use stealth and line 6 as your tracker, as your trail. Comes back and it tests it, pushes all the way up to 70, 70, 50, right there, 71, and then it stops you out. There's a number of ways to manage this. And what was the overall move? Right here. You went from 61 and a quarter to, so that's 9 times 9 handles, 9.5 handles times 4, 36 ticks. This moves almost $500 plus your scalp. And many of you early on, when we first asked that question, when we first started out at 5 o'clock, what was your goal? Many of you typed in $200, $300, $400, $500 as your trading goal. And so here you could have made 600, depending on where, each leg of this, where you took it, where you got in and out. There was plenty of opportunity. And if you did 2 lot or more, you could have made easily over $1,000. So by 6:39 a.m. Pacific, and you're up $600, what do? You didn't take anything else. You didn't take a Nasdaq trade. You didn't take a gold trade. You didn't take a YM trade. This is it. This is it right here. Right here. $600 less commission. 6:39. You were exposed to the market for a total risk of 9 minutes. Switch to sim and call it a day. Good. Stop trading. Nicely green, turn off the machine. So this, what I am showing you right here on this trade. Now, by the way, it bounced right here and then it went back up to check that. So, but you could have been done right here. I'm going to draw a rectangle around this. So I want to be super clear about what I'm talking about, and there's no confusion about it. This rectangle and what happened on ES and all the prep it took to do it and take it is the embodiment of what we want you to do every morning. No more, no less. In that rectangle, this is what you want to do every single morning. You want to be done as fast as possible with 1 or 2 trades, and you are done. That's a wrap. Any final questions? I hope this was clear. I'm going to stop the recording.